Assalamualaikum. To continue, my name is Farzana Akila with my partner Siti Nur Shazwani. We will present on Islamic rates. Islamic rate is a type of investment that is ethical and helps support positive social and environmental change. The Islamic rate system is different from the conventional rate system because it is based on the Islamic law principle. The Sharia principle is a rule in Islam that says you cannot do things that are haram, religiously forbidden, and also things that are halal, permissible. This principle is often used when making investment. There are some things that are considered harmful and destructive, and so they are considered haram. Malaysia took the first step towards issuing Sharia guidelines for Islamic rates in November 2005, which were published by the Sharia Advisory Council of the Securities and Exchange Commission. Every Islamic financial institution offering Islamic products and services is required to establish a Sharia Advisory Committee or advisors to advise and ensure that the operation and activities are in Sharia compliant. Next is type of Islamic rate. First, equity rates. Equity real estate firms own and operate income-generating real estate properties. This can include leasing, developing properties, and providing tenant service. Next is mortgage rates. Mortgage rates are a type of financial institution that lends money to real estate owners and operators. For a mortgage to be compliant with Islamic law, it must be structured so that it is free of interest and result of universally accepted Islamic contracts such as ijarah to give it a global appeal. Third is hybrid rate. A hybrid rate is a type of real estate investment that combines equity and mortgage investments. They are both the owners and operators of real estate providing loans to those in the business. This balance rate tends to the moderate of risk reward of the first two rates. Next slide is Sharia guidelines for Islamic rate. First, non-permissible rental activities. Renting is the main source of income for the investors. The rental activities must use halal or allowable sources. They may not be from a company that deals with things like riba, selling products that are not halal, or anything else that is prohibited by Islamic law. 2. Renting out to a new tenant. If the new tenant engage in activities that are considered impermissible by the Islamic law, the Islamic real estate fund manager cannot allow them to stay in the property. Third, acquisition of real estate. The rule still applies even if the percentage of rental from the said real estate is below an agreeable level of 20% of the total turnover of Islamic real estate companies. For takaful coverage, Islamic rates are required to use takaful scheme to insure their properties. Fifth, risk management. Islamic financial institutions are allowed to take part in forward sales or purchase of currency for the purpose of risk management. Islamic rates are encouraged to deal with them. That's all from me. Thank you. So I pass to the next presenter.
Assalamualaikum. My name is Siti Nur Shazwani binti Dola. So the introduction of Islamic rates is viewed as one of the most significant initiatives to broaden and deepen the product base of Islamic capital market in Malaysia. It can also help to enhance competitiveness of Malaysian Islamic capital market by attracting global Islamic investors who wish to diversify their investment portfolio which are Sharia compliant. So first characteristic is non-permissible rental activities. The Sharia committee or advisors are allowed to use their own discretion based on ijtihad to determine other activities that are deemed non-permissible to be included as a criterion in assessing the rental income for the Islamic rate. Secondly, risk management issues. So Islamic REIT is permitted to participate in forward sales or purchases of currency and is encouraged to deal with Islamic financial institutions. If the Islamic REIT deals with Islamic financial institutions, then it will be bound by the concept of what? Which a unilateral promise where only one party is obligated to fulfill his promise or responsibility. The party that is bound is the party that initiates the promise. Thirdly, takaful coverage. It stipulates by securities commissions that an Islamic REIT must use takaful schemes to insure its real estate. However, in case that takaful schemes are unable to provide the insurance coverage, then the Islamic REIT is permitted to use conventional schemes. So basically, this is the structure that involves in IREIT. The sequence is as follows. First, investors invest in IREIT through holding of units. Second, IREIT acquires real estates as its pool of assets. Third, manager manage and administers IREIT. And fourth, trustee will act as custodian of the fund. And fifth, Sharia committee advises on matters pertaining of Sharia. Sixth, property manager provides maintenance and management services of the real estate. And last, tenants will rent the real estates. Moving on to benefits, if we or any human being invest in Islamic real estate investment trust. So firstly, REITs are fairly liquid and can be sold off to raise cash to take advantage of other investment opportunities. Secondly, tax benefits in taxable jurisdictions and other government incentives to promote property trusts to encourage retail investors to assess professionally managed shares of real estate. Thirdly, benefits from government incentives in jurisdictions that have the top-down approach to encourage the growth and deepening of the Islamic capital market and Islamic wealth management industry. Apart from that, tax-free jurisdictions can attract foreign investors and also low correlation to interest rates.
Hi, Assalamualaikum. My name is Wasbani bin Zafrul and I'm going to present about derivative. So what is a derivative? Derivative is a financial instrument that derives its value from the value of its underlying asset. And a derivative can be defined as a financial instrument whose value depends on or derives from the values of other more basic and underlying variable. Very often, the variables underlying derivative are the prices of traded assets. However, derivative can be dependent on almost any variable. And for the option contract, what is option contract? Option contract is financial instruments that convey a right but not an obligation to engage in a future transaction on some underlying asset, underlying securities, or in future contract. Options are traded both on exchanges and in over-the-counter market. And for the option contract, there are two types of option in this contract. The first one is call option. So call option is to give the holder the right to buy the underlying asset by a certain date for a certain price. And the second option is put option, which put option gives the holder the right to sell the underlying asset by a certain date for a certain price. So the first one is call option, which is the right to buy, and the second option is put option, which is the right to sell. And the price in the contract is known as the exercise price or strike price, and the date in the contract is known as the expiration date or the maturity date.
Hey, my name is Iman Aslah. Next, I want to talk about the option in Islamic finance. When seen merely as a promise to buy or sell an asset at a predetermined price within a prescribed period, Sharia scholars find nothing unpleasant with the option. It is in the trading of these promises and charges the premium that the objection is raised. So the options have generally been examined under the doctrine of fiqh al-khiyarat, that is contractual provisions, or under the concept of buy al-urbun. So the al-urbun is a transaction where the buyer places an initial good faith deposit. Ahmad Muhyiddin Hassan said that the option trading contracts are prohibited for two reasons. Firstly, the maturity exceeding 3 days as in al-khiyarat is not acceptable. Next, the buyers get more benefits than the sellers. So the Hashim Kamali in 1998 said the acceptable options trading invokes the Hanbali tradition and also make an analogy with Al-Urbun in arguing that the premiums are acceptable. Also mentioned that the contemporary scholars such as Yusuf Al-Qardawi and Mustafa Al-Zarqa have authenticated Al-Urbun. So next, the Sharia Advisory Council, the SAC, Securities Commission, that said there is, although there is no official opinion on stocks or index options, the SAC has allowed such as instrument others for the others options. Firstly, the warrants, secondly TSR, and third call warrants. So each of these is really an instrument like option. For example, call warrants are only old dated call options, so it have a similar risk or outcome profile. The next advantages, firstly, the leverage. Options allow you to employ considerable leverage. This is an advantage disciplined traders who knows how to use the leverage. Next, risk or reward ratio. Some strategies like buying options allow you to have unlimited upside with the limited downside. Next, unique strategies. Options allow you to create unique strategies to take advantage of different characteristics of the market like volatility and time decay. Lastly, low capital requirements. So options allow you to take a position with a very low capital requirements. Someone can do a lot in the options market with $1,000, but not so much with $1,000 in the stock market. Okay, lastly, for the disadvantages, firstly, lower liquidity. Many individual stock options don't have much volume at all. The fact that each optionable stock will have options trading at different strike prices and expirations means that the particular option you are trading will be very low volume unless it is one of the most popular stocks or stock indexes. So this lower liquidity won't matter much to a small trader that is trading just 10 contracts do. So next, the higher spreads. Options tend to have higher spreads because of the lack of liquidity. This means it will cost you more indirect costs when doing an option trade because you will be giving up the spread when you trade. So next, the high commissions. Option trades will cost you more in commission per dollar invested. These commissions may be even higher for spreads where you have to pay commissions for both sides of the spread. Lastly, the complicated. Options are very complicated to beginners. Most beginners and even some advanced investors think they understand them when they don't.